Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I want to bring some companies to you that I think have experienced any of the pain that they're going to experience or have been resistant to the pain that we've seen with the growth stocks and the high multiple stocks. And I really think that these ones have some potential to either maintain the money we have or through their dividends increase the money that we have or still have some room to run ahead of them. So you can go ahead and check those out if you're interested in those individual securities. So let me show them to you. For right now, let's get ready to rock. Welcome back. For those of you who are interested, down in the description is a link to my Patreon. By signing up and going over there, you get access to my portfolios, my weekly newsletter, my weekly watch list of stocks, also the private Discord where we go and we talk stocks and we bounce ideas off each other. We provide support to each other, especially through all this sell-off that we've had in the higher multiple stocks, the growth stocks as they were, and really, it's just that part of it's been a rough time. But in other areas, crypto's been pretty exciting, especially with the Coinbase IPO. So if you guys want to check that out, that link is down in the description. I appreciate the support ahead of time. Also down in the description is a link to Webull. By depositing $100, signing up and depositing $100, you get 2 free stocks. I get 2 free stocks for the referral. I really appreciate the support that you guys can show there as well, and also you get free cash out of it in the form of those free stocks that are offered to you, so you can't really lose there. Finally, if you haven't already and you'd like to, hit the subscribe button, hit the notification bell, hit the like button, share it with your friends. Let's get on to the stocks. Alright, so the first stock that I have for you is Energy ticker symbol NRG. And for this one, you can see it's really had just a rough go of it. This gap down that you see here came from the trouble that we had in Texas with the winter storm Uri that came through and just really devastated Texas and really pointed out the infrastructural problems that they have. And so this is a company that I think really has room to grow in the way of innovation. And you can see they've had quite a big return and then another steep drop off because the impact that the winter storm had on it is just something that is really roasting the stock. They stood to lose something like $750 million or something with that wintertime storm coming through, and you can see this new resistance that is building up over here right across the top, right around $39 per share or so. And really this is a company that was on its way towards an investment grade stock really up until we had that interruption with the winter storm and really digging into its revenue quite a bit and possibly even into its bottom line. I'm certain into its bottom line as we go. If we look at the analyst estimates on this, we currently are sitting just above the low analyst estimate, and then we have room to 45, so just shy of a 20% gain, and then we have room after that up to $52, so just shy of a 40% gain. So this is one that trades at a forward earnings multiple of 6.6, so it still has a fair amount to go before it grows into fair value. So it's just one that I want to bring to your attention. It's one that hasn't seen the same pain, even if we zoom out more. I mean, it's seen pain because of weather disasters, if you want to think about it that way, or black swan events, and it's things that really took its toll. But it was a company that was already looking fairly successful and fairly strong before then. And this is one that I think is going to return to strength over time as long as we give it time to get there. Alright, the next stock that I have for you is ABBV, and you can see that they've had, it's still pretty choppy in here, so some of it's the scale that we're looking at. So let's zoom out and you can see, there we go. You can see it's really been trading in a range, I guess would be the way to say it. So this bottom that we have here, right around $100, and then all the way up to this top here, about $108, $109 or so, and it has popped up above there recently. So you could treat this like a range trade play. One of the nice things about ABBV, I have it in my dividend portfolio, and I bought it back in, I think February 1st was the exact date that I purchased the shares for the dividend portfolio. And so if we go back to there, you can see we're about this bottom. So I've been floating right around in there, but then it also has a really healthy dividend that goes along with it. I believe it's a 4.8% dividend that goes along with this stock. And if you look at the analyst estimates on this one, we have a little bit of a downside down to the low, so a little bit of bearish behavior there, but we have even more room to run up, the high estimate being up to $144 per share. So that'd be about 30% up from where we're at now versus about $11 down, so about a 10% downside. So investing in this, you could take your risks, but then also that dividend can certainly help to produce income, and it could also help mitigate those risks as well. So I think that ABBV is a company, like I said, I talked about it before, and you can see that it's really holding on to its strength as time goes on here. And if we check out its profile, we can see that it's in healthcare and pharmaceuticals, and healthcare has not been all that strong recently, but ABBV has been persevering anyway and persisting anyway, and it keeps on returning back up to that about $108 and $109 level. So it comes back down. I expect it to come back down to around $100 or so, and then float right back up, and keep on watching that range trade if you want to play it that way, or maybe even a swing trade. Just watch for your opportunities in the meantime. The last one that I have for you is Synchrony Financial, and this one just trades at 8 times earnings, so this one also has a fair amount of room for growth ahead of it. And you can see it's not up towards the top of the resistance line that we had before. Instead, it's moving more down towards forming a little bit of support that we have going on here. And if we go off a trend line, it looks like we're right around the bottom, about to bounce off that trend that we have. So let me pop a trend line up there so that we can see it. There we go. So not perfectly drawn, but you can see that we sort of bounce off that line. So I anticipate, if everything goes well for Synchrony Financial, we're going to again bounce off this line, and maybe we'll go up to resistance. Let me shrink up this scale a little bit here so we can see where that resistance is. So this thing's topping out around $43 a share. So that would give you about a 7% upside from where we're at right now. And if we look at the analyst estimates for this one, for the analyst estimates, you can see where we have a room for about a 10% drop down to the low estimate, but going high, 20% to the average, and then after that, we're up another $19. So almost, we're closing in between 40 to 50% upside to the high price target that we have here. So between the low multiple and its current position, and the fact that we're about to bounce off that trend line, I think that there could be a little bit of opportunity here for us in the near term, and there could be more of an opportunity over the long term, especially being a financial stock, and financial stock supposedly doing well throughout the recovery that we have, and also good for inflation plays, and also for the return of higher rates. So let me summarize. NRG has room to run up. It still has to recover from that hit that it took in Texas during that winter storm Uri, with the big power outage that they had. Certainly not strong for the company, losing a ton of cash over that, but it's cash that they can recover, and I see a lot of strength coming back to that company over time. ABBV, also a company that I have. Like I said, it's in my dividend portfolio. It pays a really healthy dividend. I believe it's 4.8%, and right now, like I said, it's sort of trading in a range, so you could treat it as a range play if you wanted to, or you could just buy it and hold it on for a dividend stock, so just more of a solid investment there. And then finally, Synchrony Financial, trading at about 8 times forward earnings. For that one, again, has a fair amount of upside with a limited downside as far as price targets go over the next 12 months. So these are just 3 stocks I wanted to bring to you, ones that have not been affected by this huge sell-off that we've had with the higher multiple stocks. So I just wanted to give you guys some alternatives. If you're interested in investing in individual securities, this is just 3 of them that you could check out, and I'm sure that there's lots of others that you could go and you could look at. Take a look, see what you think, do your research, do your due diligence, and if you decide to take a part in it, if you decide to take a position after you do those things, great. And if you don't, well, there's certainly no harm in staying out of a trade that you're not comfortable with. So that's what I have for you today. If you're interested in joining my Patreon, that link is down in the description. If you're interested in signing up for Webull and depositing your $100 to get your 2 free stocks, that link is also there. If you haven't already and you'd like to subscribe, go ahead and do so. Hit the like button, hit the notification bell, share it with your friends. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.